with anything with a .com attached to it has been irresistible. Has witnessed returns of several 100% on investment in companies named Yahoo and Priceline and iVillage, with lookalikes and soundalikes coming onto the stock markets just about every week. Well, while enthusiasm for these internet stocks has cooled a bit lately, there's no question they've fueled the surge in stock prices overall for the past 2 years. But how can a company which didn't exist on Friday turn up as a hot item on Monday with $1 billion worth of investment, no real product, and no chance of a real profit anytime soon? Rita Braver has our cover story.
So now what's happening is Traffic Server now has other software companies writing their software to run on top of it.
In the Silicon Valley office of a company called Inktomi, Chief Executive Officer David Peterschmidt is talking internet language to new employees.
If all users go through Traffic Server to get all internet content, now the only thing we have to do is put transformation on top of Traffic Server.
If you're having trouble understanding exactly what he's talking about, you probably won't have any problem getting this. Inktomi, which provides a service that lets other internet companies retrieve information quickly, is growing so fast it's had to build a new headquarters. It went public a year ago at $18 a share, immediately doubled, split once, and closed this week at about $91 a share.
Good afternoon to me.
About how much is your company valued at right now?
Today it's worth about $5 billion market cap.
Have you ever made a profit?
No.
Have you ever paid a dividend?
No.
And Inktomi is one of thousands of hot new technology companies that are both operating at a loss and fueling a frenzy in stock trading. The companies, many with a .com at the end of their names, are all part of the internet.
And careers. It's all on women.com.
The worldwide information network that lets computers and their users talk to each other and share data instantly. We can already get the latest news on the internet or send each other electronic mail. We can shop for goods or services, toys or books or airplane tickets. And we'll soon be able to get television programs and movies via computer too. Few of the companies that provide these services are actually making any money from them yet. Still, many stock buyers are speculating that even without proven records, these companies will eventually bring in the bucks.
For the most of these internet stocks,
I mean,
you have to be a trader.
If you want to get in on these puff of smoke stocks that are here, you know, when they go up 100 points in one day, and we have to monitor that, and we can't do that here.
Others, like the guys in this Staten Island, New York investment club, are skeptical.
It went up it was $17. It just opened up, and it $17. Is it going to go up to 50 tomorrow? Or?
Did it fly?
Yeah. Yeah.
We talked to club president Joe Fisher in his auto parts store.
When you look at an internet company, most of them are less than a year old. Most of them have no track record. So why would you invest in something that you have no idea what they've done in the past or whether they will succeed?
I would definitely vote for...
The club invests only in companies that have made a profit in the past and are continuing to make money. So there's been no internet buy. But like a lot of us, club members are second-guessing themselves. They question the wisdom of investing in the internet, but they also question their decision not to invest.
Yes, I feel like I missed the boat. Like here's my analogy. I was on a bus stop and I watched it go by. All right?
Newsweek financial columnist Jane Bryan Quinn doesn't think Fisher and his friends will have missed out in the long run.
You recently wrote a column calling these internet stocks. Why? What did you mean?
I meant that they are so crazily priced. They are so beyond anything that we've ever known in pricing a stock intelligently. They simply cannot deliver what people would expect as a long-term investor. First, everybody thinks that they will be the person who gets out before the fall. And of course, a lot of people will not get out before the fall. You always think it isn't going to happen to you, but times will change, and the change is not announced in advance. And when it turns out that it changes, there will be a big drop. and people are going to lose money.
This is a new office space that we're going to have down in 120 Broadway.
Yes, this will be the very first place that we're finally going to be able to, one, house all of our employees from all over the city into one space.
But there's a different view at theglobe.com. Co-founders Todd Kreiselman and Stefan Paternotte.
How old are you, Todd?
I'm 25.
And Steph, how old are you?
25 as well.
25 as well. So together you're 50.
Together we're 50 years old, absolutely.
Their piece.
As Cornell undergrads, they founded The Globe with a $15,000 investment.
Make it look good.
What did your parents say when you announced that you were going to start a company?
They were extremely concerned.
That diploma, so expensive.
Yes, they were, for both our parents, they conspired. They'd call each other and they would say, this is a good experience for these guys, but make sure you get your degrees.
They finished college and kept their company going, too. They call theglobe.com an internet community. It's funded by advertising revenues, but free to all users, like broadcast radio or television. But at The Globe, you can talk back. The main goal is to foster cyberspace friendships.
There are people who are chatting, there are people in forums, you can self-publish, you can join with other artists in little interest groups. Everything we try to do.
When theglobe.com went public last year, the stock was priced at $9 a share. It opened at $87, split once, and closed this week at about $15 a share. The company is now valued at $500 million. Together, the founders own some 15%.
So you're fairly rich fellows.
Only on paper. Now, as you were pointing out, with stock fluctuations, you don't own any of it unless you sell it. And Todd and I are not selling because we think there's a lot more up in the stock.
They don't have the contract yet. There have been no profits so far. But Kreiselman and Paternotte insist that the economics of their company are based on the fact that every year, millions more people are logging onto the internet.
Do you want to try and capture a smaller part of the market and be profitable, or do you want to just go and grab as much territory as you possibly can? And in our particular case, like most internet sites, you're trying to go global. You're trying to capture 6 billion people, and if it means you push out profitability till later, however, the stakes are much bigger, that is what's more interesting to everybody.
Many of those investing in internet stocks are so-called day traders, people who move in and out of these companies quickly. Of late, there have been great fluctuations in the market. In fact, both Inktomi and theglobe.com are down from their highs of the past year. Still, all business analysts agree with Inktomi's Dave Peterschmidt that internet businesses are here to stay.
I think they represent the future. They're not just about what's going on today. It's pretty clear that the internet is going to be the major medium for the way we conduct a lot of our daily lives, both in information but also in the way we live.
I guess you have to ask yourself, with so many companies out there, can all these technology companies survive?
Some companies will fall by the wayside and won't make it, but I think that's really the minority. Normally what happens is the smaller companies will get absorbed into larger companies and there'll be consolidation.
But as for investing,
what do you say to the person who just feels like they don't want to miss out on all of this?
I say take a tiny little bit of your money and buy it. It doesn't hurt. It's really a risk assessment. Can you afford the loss if the stock goes down 75%? If the answer is yes, and you feel that you want to have a little fun with it, why not? If the answer is no, if the answer is it would wreck my life if it went down 75%, you have no business being in it.
Well, we'll have $600 in cash.
And Joe Fisher and his pals in the Staten Island Investment Club should know that from California's Silicon Valley to New York's Silicon Alley, even the hottest of the internet hotshots say, take that advice.